Great. How are we feeling, everyone?
We're going to do this real quick because, okay, good. We're perfect on time.
Yeah, great. So what's funny is, Travis will be one of the last people to ever leave an event. Have you been to events and talking to him? It's like, oh, Travis, there it's like midnight. What's going on? Where does Aaron go? He's nowhere to be found. I'm nowhere to be found. There's a reason for that. There's a reason we make such a good fit in doing this. Travis is an outgoing extrovert. Right? Would you agree with that? Yes? Yeah. Aaron is a outgoing introvert. Look it up. It's a real thing. I was talking about that yesterday because I like doing this and I like serving. This is not my most favorite thing to do. I like working our stuff in the back office, doing our deals, going through that, helping with various systems and things. So we all have our different personalities and how we work together and who we choose to work with and partner with and who we choose in vendors. I manage all the vendor relationships we have. We have just a great deal of strategic partners there that we've assembled here. So anyways, I thought it was just funny to just go through. You'll get the little dynamic here, and I'll just let you in on that. So what we've done is we've given this.
Thing?
Yeah,
is there anyone else in the room that has obsessive compulsive tendencies that's noticing something that I'm noticing? Just out of curiosity, any of OCD people in the room that want to admit it? Travis is raising his hand. What is wrong with that slide? The name's not centered. Is that wrong? So he's talking about personalities. John's laughing back there too. But anyway.
I didn't even notice it, but.
I'm always resize and redo it. Anyway, keep going. We're ready. So this presentation here, guys, is something that I wish we would have had, right, when we started note investing. It's just a little short presentation, right, that we want to give to you before we go into a couple of the activities we have planned. So I hope you guys feel it was helpful. We had a lot of great feedback given it last year, and we hope it'll be helpful. Just the different models that you guys want to be aware of and which one might be a good fit for you based on where you're at.
So you've heard us talk about that at the very beginning, and it's not anything that we've necessarily invented ourselves or come up all on our own, but we've taken bits and pieces from everything that we've been learning in the business and, okay, let's go through all these various models and figure out, okay, which works best for you guys. So as you're coming up with your plan for passive income and investing in real estate and notes, what works for you? Is it one of them? Is it two of them? Is it all of them? Am I starting with one of them first and then moving on to the next one as I'm mastering each one? And that's okay. You're going to figure that out. So we feel it's our responsibility to share what we've learned and pass it along to you so you can make and formulate a plan. Does that sound fair? All right, very good. So in the next 30 minutes, we're going to go through and hopefully bring clarity, focus, and action, which ultimately lead to profits, okay, in what we're doing. Again, we showed this over there, but what is your passive income plan? Write that down. Just as a writer-downer, so you can come back to that later and make sure you don't miss that.
Why is that in there twice, do you think? Right? Can you go, these models, we're going to go kind of give you a high-level overview of the different models that people are making money with in the note business. But are you, if you're a bright, shiny object, oh, where's the next one? Hey, that looks fun. Hey, let me go over here and see.
No one in the room is that
Those guys,
way,
I know, just Travis and Aaron are like that. I know I'm just talking to myself, right? But I'm telling you, you need to know this, right? Oh, okay, just Travis. Okay, threw me under the bus. But just really quick, there's a few quick slides in here that I want to just hit on again to reemphasize, and then we'll jump into the models. But go through that. It's not a product or procedure. Next. And it's driven by your why. Everyone has their why, and if you haven't emotionally connected with that or doing that on a daily basis, you need to do that. And we've had conversations with a few of you that have a really deep why, and it drives you. And I can see how that drives. That's why you've been successful in other parts of your life. But these are just a few questions, right? We will provide the slides for you in the recordings, but you're welcome to take a picture of that. But as you're putting together your plan, right, and again, page 36, come get a picture of it, and Think and Grow Rich, I'll give it to you. But those are really key. You answer those as we go into these models. We'll talk about the different models that help you, whether you want to be more active or you want to be more passive, right? Whether it's a hybrid of that, what you might want to do, right? So keep going. There's just another slide here. And there's 3 parts of this, right? There's 3 parts of that plan, right? When you're really wanting to kind of break free and have some flexibility and not be out of the rat race. There's a fine gentleman here this weekend that has skied 30 days this winter. How many of you guys would like that flexibility to ski? Because you're not just skiing in the morning, right? You don't just do all that work to ski for the morning. You ski the whole day, right? And he skied 30 days this year. That's what Notes can do. We're going to talk more about that. But security, comfort, and wealth, right? So go ahead. You're good. And these are just something. It's a starting point. You want to document the before and after. And go impress yourself, right? Go impress yourself. Be your own case study of what this can do when you're out helping other people. Go ahead, next one. And notes, right? Notes are just one vehicle that I want you to think about. So your plan, you have investment vehicles within that plan that are going to help you get there. All right, let's jump into them. We already had that. Did you guys write that down? Because if you didn't write it down, I gave you a deadline right there.
There we go.
I gave you a deadline.
I did it for you.
To have that done in Travis's email, travis@capstonefundinggroup.com, if you want to email me your plan as an accountability, or we're going to have a chance to...
What's that?
How did you put that in there this morning? That's funny.
What is that?
Show off. Okay, guys, which one of these is right for you? So, not to be confused with the 5 note investor profit pillars, right? These are the profit models. And there's more than 5. You can have different combinations, but these are the most common ones we see people that we run into and that we really invested a lot of time in. So they incorporate each of the 5 profit pillars. Some, all of them, some, only a couple of them. So let's go into model number 1, right? So this is really just a find and fund, right? So this is somebody who gets their black belt in sourcing product, right? And they're really good at relationships, right? They're really good at relationships. They might not have a lot of capital yet, right? Some of them might have a lot of capital. But in this case, it's when you first get started, it's kind of an earn while you learn, right? And how many in here have already cashed a broker check, brokering notes? Not enough, right? I want you guys to look around. That's a small number. And there's people in here that make a lot of money brokering to help with their monthly break-evens, right? Because on the back end's passive income. So there's some sessions about, this would be, you're really leveraging other people's money. You don't need to have any money to do this. And you can master this particular process. So, you'd be a note broker. But I love that third line, guys. You can do that. You can learn this. And quite frankly, people that have money that want to buy, a lot of times, I've spent time educating brokers. Why do I do that? Because if they're hungry, are they going to go find stuff for me?
Absolutely.
They're going to go do that, right? And we have some capital to deploy, so it's important to do that. Next model, that's number 1, right? So that's a very easy one to get started, and it's where a lot of people start. So find, fund, and flow, right? This is what I wanted right off the bat with some capital that I had that was burning a hole in my pocket and other investors that we had. So we got involved, right? It's the easy button, right? Anyone in here besides Travis enjoy the easy button, right? So we got 11. That's
great.
Awesome.
The rest of y'all can do all the hard work.
Okay,
for the rest
next.
Of us.
I'm just kidding. Let's keep going here. Go down, click the next one. So this is the passive investor's dream, right? Leveraging the velocity model. You'd be very intrigued in learning more about partials, right? This helps you continue to build out, different ways to have that find, fund, and flow, right? So there's capital involved, whether it's yours or somebody else, right? And there's a lot of note creators in the room.
We had a lot of that yesterday.
They're manufacturing notes. They're creating notes that you can then go and purchase. Most people don't want to stay in those notes. They're good at creating them. They make a spread when they sell them off. And that actually for you is just a new turnkey model that you can invest in. So I know a lot of you are here, and when you're networking here in just a minute, right, I'm trying to help you guys see you're going to have a primary, and you're going to have a secondary, and you might even have a third one, right? But you're going to definitely have a primary where you would start, or you're spending a lot of time now. Then you'd have a secondary. So next one, let's go ahead. Okay, so this is one, after we bought our initial reperforming notes, which we loved and still love, and I still hold those, and we've had them for over 2 years, and it's like clockwork. We did have a little glitch with one that slowed down, and then a second one that missed a payment, but they got right back caught up, and these are a dream, right? But what we found out is that on those notes we had bought, because we bought them from another hedge fund, and their model was what? This model. So they had found them, they had bought them, and they had bought them really, really cheap. And what had they gone and done? Fixed them up, right? Worked them out, rehabbed them, whatever you want to call them. They had created some modifications, right? And so then it was presented to us. A big thank you to Mahmoud's at the back. He helped us get some of our first deals done, over 2 years ago, and continues to send quality deals to us. And, we want to continue to grow that side of the business as well. But that's what you're doing. You're actually, in the case that you've got where you're actually fixed them, I found out that in that case, I could start a little earlier in the food chain and work that out. Did I have the skill set to do that? No. So guess what we did? We hired people that's what they did all day to come in and train us and our staff. And I was blessed, and I don't think they're in the room, but I was able to, through a relationship we had before, if you decide that you want to not be involved in workouts all the time, 2 really good people to think about. People who have an extensive short sale background, right, that have negotiated short sales directly with a bank, right? They get a lot of the back and forth, but now they're on the other side of the table, so they've got the psychology. They get that. And Monica, who's here, has been an absolute just gem for us. She's just crushing it, helping us out on the workouts. And then, in San Diego, and this is something you guys can look at too, but in San Diego, Chase Bank actually closed down their office, their foreclosure division, right? Collections, bankruptcy department.
It was in Rancho
Bernardo. And they moved to Texas. And literally, I did not even know. It was just up from us. And a good friend of mine that had worked there for 7 years, we knew her from before, she reached out to me on LinkedIn, and we had just bought 51 new loans that were above and beyond what Monica could handle. And she literally reached out to me on LinkedIn and said, here's my resume. And she had been in the hard collections department there for 3 years, became the bankruptcy supervisor, had been the representative in that office of 30 other people who got trained on the HAMP program, the modification program. I think that'd be a useful skill set. Well, they moved their office to Texas, and she was out of a job. And so I said, can you start tomorrow? Can you start tomorrow? And
Travis
so that's
and I are in the background high-fiving each other in the conference room. We're like, yes!
Because it allowed us to scale. That's a key relationship, right? So those are people, and what we wanted to do is have those people, and they've been trained by other people who are working on a daily basis as well. We believe in training, right? And we found ways to offer that out to you guys too. So I love this number 3. We're heavily into number 3, right? But it may not be for you. If you don't want to, you might want to do it, but you might outsource some of that fixed part. So I want you to really think about that. There's people in this room, right, that actually will do the fixed part for you, right? And you just have to decide, right, do I want to do a little bit of it myself so I understand it and then outsource, right? I feel like you got to be involved. Right? Some people are like, no, you can't scale if you're doing that. It's like, so it just really depends. You want to learn and interview people while you're here. I like the returns of non-performing notes that I keep hearing about, right? It's like you hear them and you're like, wow, I really like that. But it takes work, right? It takes a lot of work to work those out. So, and the question is, if you answer those 2 questions on the back end, are you going to be passive or active? If you're passive, this model, you can still participate, but it would be in a completely different way, right? Part-time or full-time. How many of you guys think you can work 3 notes full-time? You can. So you can do this. You can still do this model part-time, right? But it depends. If your loan count starts getting up there that you buy or do, you can't do it so much. So next slide, number 4. So this is find, fund, and flip, right? So all of us, people that want to go full-time, right? You might have a bucket of cash, right? And you're doing certain things to enhance the quality of that loan after you do it. There's things you can do. You might just be able to buy in large quantities and sell off in smaller quantities. This is known as trading, right? So a lot of people, there's people in this room that do very well trading notes, and it's a very viable model if this is something that you're interested in. I say smaller margins, it just really depends, right? It depends on what your relationships are and how you're able to buy those. But it is a volume game, right? And the reason I have this up here, because it is a way that it's important to be able to get to that flexibility, right? I want to be able to do stuff, right? And we did not start off doing this. We've done a little bit of this more recently, But our main goal is to work them out and keep them, right? So this is very similar to Travis Consulting and having to consult again next month, right? Fixing and flipping a house, and then having to fix and flip a house again next month. If you're trading, what do you got to do again next month? You got to trade. So when you're working with people and getting advice from different people, you really want to analyze where their advice is coming from and what their motives are, right? That's another Jimmy Napier-ism that he said to me when I had a chance to talk to him. He says, a lot of the work that you do, right, when you come to these live events is to figure out who to do business with and who not to do business with, right? That's a big part of the work, right? Because you're hearing lots of good things, but does it meet your plan, right? So very important. Next one, let's go to the last one. Number 5, that might be a repeat. There it is. Fix and flip. So you're actually not just flipping them, you're actually, after you fix them, this would be a situation where you sell off your reperforming notes, right? Who I bought a lot of my reperforming notes from, I would love to know what their purchase price was, right? Because I know that it was probably doubled their money selling me a reperforming note. And I know on some of these second mortgages that people get reperforming. I personally have not sold any of those reperformers. I'd like to keep them, but sometimes people say, hey, velocity, if that's part of your model, I'm looking for cash flow long term and have a mix of that between first and seconds and rental properties. But there are some really important things. There's a couple of people that will be speaking, talking a little bit.
Jack Kiley with Mid-Atlantic. He'll be talking to us about some tax strategies and also comes at it from a different perspective as an administrator and is also a CPA. So that'll be a great session. And
there'll be some panels that will learn a little bit about structuring those modifications and notes for resale on the back end. That's very important. So that's very good. So is that helpful for you guys? Did you guys just going through those notes? Is that helpful?
Good.
Show of hands really quick. Is that helpful to know what those models were? I'm telling you, I wish I would have known because I just felt like I was like a ping pong ball. Like literally going to these events, I felt like a ping pong ball just going everywhere. And it's like, I want to do it all. You know what I mean? This all sounds good, right? And it was like, and it's impossible to do it all. You have to really kind of put those pillars in place, right? And really rock and roll and set that up.